All right, what's going on, everybody? Welcome to the MIE Trading Podcast, the podcast where I share my knowledge and experience on trading psychology, risk management and strategy, and anything else you need to become a better trader. However, today, it's not me sharing the experience. It's my friend, Sam Varis from Triple Point Charts. How you doing?
Good, man. How are you?
I'm good. Let's start off. Can you tell the audience a little bit about yourself and what you do?
For sure. Yeah. First off, thank you for having me on. You are definitely the homie. I look at you as a friend, and you're younger than me, but I still look at you as a mentor because you know a hell of a lot more than I do when it comes to trading and strategy management, all the above. So thank you. Yeah, but my name's Samuel Varis. I've been trading for about 3 years. I started full time when coronavirus kind of really took at least America by storm. I'm from Florida. 29, I got a family, I got 4 kids. This last weekend, actually, I've been married for 10 years. It was my 10-year anniversary. So
congratulations.
Thanks. I'm still kind of on vacation mode. That's why I'm not in my office tonight. I'm on my front porch, just hanging out. But yeah, I started my trading journey probably about 5 years ago. And about 3 years ago, I took it full time. It's been incredible for me, but it has been trying at times, and it's been triumphs at times. Lately it's been triumphs. It's been very good.
Yeah.
It seems like in a bear market, I perform much better than a bull market for some reason, but I'm going to ride the waves as they come.
Yeah. I found it interesting that you said lately it's been triumphs, like basically free money, coronavirus. It was trying. It's like everyone else is pretty much backwards at this point. Right now, it's trying times, and before was triumphs. And that's certainly the way it was for me. Like during the free money phase, like I thought I had the market figured out, and I'm like, yes, sure, it's so easy, so much money. And now we're in the bear market. It's like, all right, I actually got to get my shit together. Yeah.
Well, we've talked about it before, but where I am, we have the options market. So for like the last, maybe year, 6 months or so, I've been trading options. So lately I've just been buying put options, which is, betting that the market's going down in price, betting that a security is going down in value. So I've been able to really leverage myself in a really good way recently. And it's been pretty much across the board where everything's, kind of going down.
Right. And have you always done options, like right from the start 5 years ago?
No. I actually was warned to never play with options by the person that taught me trading. There's just so much more risk when it goes into options, or seemingly, I guess there's risks with everything, but kind of the narrative with options is it's a lot more risky than just regular trading or shorting in general. I started with just trading stocks. Like I traded oil, CL, like crude oil is where I started at.
Right. That's interesting because that narrative that like if you jump into options, you're going to have, it's immediately more risky. Now, I'm not really too experienced in options, but the way you explained it to me last time we spoke, honestly, I was able to draw like a lot of parallels between options and then the way that I trade CFDs. Like to me, It actually seemed like the same thing, just a lot of terminology was different.
Definitely. I would agree with that. Yeah. And I'm not going to pretend like I am a professional and I'm not the greatest trader that's ever lived by any means, but it really is just like it's an advanced terminology that comes along with options that scares people. And there's an advanced, strategic plays that you can take when it comes to options to leverage yourself in a bear or a bull market. But yeah, you just have to learn it just like anything else. I mean, you definitely don't jump into anything. Do your research, do 1,000 hours of research on options before you ever want to take your first one. That's kind of the rule of thumb.
Yeah. And another thing on the risk, it's like trading options isn't risky in and of itself. The risky thing is not knowing. The risky thing is not knowing what you're doing, not knowing how to manage risk.
Correct. Yeah. I mean, it's the same.
If you jump in on an options trade and you want like 50% gain or 100% gain or whatever, and you go in with your entire account, of course that's risky. But if you're, managing your position size and whatnot, then you can minimize risk, and it's not as dangerous as people make it seem.
For sure. And that's what it is. People think that you have these people on Twitter and you have, different discords that are showing 15,000% gain on $1,000 option call or option put. And they're going into it with that expectation, like that is the norm. That's what people are getting constantly. Like I can take an options play. Like today I took an options, and again, I'm going to expose myself for not being the most vexed in the terminology, but I believe it's called a straddle, where I bought
know what a straddle is.
yeah. So I don't really know what it is, but it's just a way to leverage yourself. I bought a call option for let's say I trade a security called TQQQ. It's a 3x leveraged ETF that tracks the QQQ. So 3x bull leverage. So if the QQQ goes up by 1%, TQQQ goes up by 3%, and the inverse. Today I took a straddle option where I chose a strike price that was significantly higher than the security was trading at, and I also chose a strike price of $1 under what the security was trading at. So I believed that it was going to go down in value, but at the same time, I wanted to leverage myself where if I was wrong and it shot up in value, my call option that I had took would increase in value to the point where I would be still profitable on the day. And
right.
it worked perfectly today. Like I took a straddle option, and I also took an additional put option where at the end of the day, the security was trading lower. I had more confidence that the security was going to go down in price, and that was where I had my bets placed. So at the end of the day, I was down on the call that I took, but I was significantly higher in profit on the puts, on the shorts that I took. So even though I did lose a little bit today, I leveraged myself to still be profitable by the end of the day.
Right. That kind of process sounds somewhat similar to like hedging, or
that's it.
Yeah.
I mean, it's the same thing. And the reason people say that options are more risky is because, for what I've heard from, I have friends that trade options as well. And when they first start out, there's kind of a misconception that you can't sell this option. Like, because when you first take an option, there's two parameters. You want to pick the price you believe it's going to be at and the date you believe it's going to hit that on. So let's say if the security's trading at $50 and you decide that you believe that it's a bullish sentiment, you believe it's going to go to $55 in a 2-week span. Those are the parameters that you choose. You can select the price and select the date, but the date has nothing to do with the date that you choose to sell on. Like, I can sell an option in 15 minutes, but for some reason, there's a narrative out there that if you have a 2-week expiration date, that you have to wait until it expires, and that's not accurate. I mean, you can scalp these. I mean, sometimes I take 10-minute trades on the options market, and I make 200% profit on my investment within 10 minutes. It's a beautiful thing, but it is scary because it does move quite quickly. It all comes down to management. You have to manage your trades. You have to manage your risk. But if you're not doing that with the stocks, then I definitely would not suggest to switch over to the options market and gamble with that, because that's not the place for that.
Right.
But it seems like that's more the culture for options. People take it more like a gamble than a trade, and it's totally the opposite. Like, I would gamble more on a regular trade than I ever would an option in my position now.
Yeah.
Not that I would ever
definitely relate with the gambling thing, because like I have a mate, and this was before options were banned in Australia. He was like, "Oh, look at this! It's options. Look how cool this is. You can make so much money so quick." I'm like, I don't know, man. Seems risky. And definitely I can see the attraction to that. And that other thing you mentioned before about people posting like 2,500% returns on a small account, like that's something that I see so often. People having expectations that are just outside what is actually possible. Like,
well, it's possible, but is it repeatable? That's what I'm looking for.
Yeah,
I want to see what's repeatable, like on a daily basis. If I'm a day trader, I want to be consistent with if it's 2,500%, is it consistently 2,500%? Or is it, what is the consistent value of profit that is coming along with these trades?
Yeah, like I can go all in on a stock with 100-to-1 risk reward ratio, and the win rate, it's not zero. It might take me 50 years to win, but eventually I'm going to win. And so like, let's say any fool can get lucky going all in on a single trade and making 2,500, 3,000, whatever percent,
For sure.
But yeah. And then like, the other thing as well is like with social media, the stuff that is pushed and the stuff that blows up and the stuff you see is like the hyper successful, the luck scenarios, right? You only see the successful people. You only see the people that are making a ton of money. You don't see the people that try it and fail.
Yeah,
and
definitely.
Most people try and fail. And so like when people come to me and they're like, oh, this is how much I want to make in a year. I'm like, nah, you can't make that in a year. Like like my number one rule is like get your risk in check first before focusing on profits.
For sure. Yeah.
Like personally, I like low risk. I can't handle volatility and this stuff. And I'm like, look, if you want to work with me, I'm not comfortable with that level of risk, you know? Like
right.
We can't have 2,000% returns.
Right. Yeah. I mean, and you really took the words right out of my mouth. It's not how much do you want to win? It's how much can you lose? That's the way to go into it, because, and I addressed this on the podcast the newest episode that we just released, but I talked about how I kind of stepped away from the Discord in giving the trades that I was taking personally, because I understand that I'm never going to invest something that I'm not willing to 100% lose. And I had some people that invested into the same thing I was invested into, but with no idea on risk management. They just went all in on the same thing that I was in like 4% of my account on. It kind of broke my heart. I was like, dude, like if they would have sold within like 7 minutes, they would have been extremely profitable. If they would have held all week, they would have got burned on it like I did, because after 3 years, you still get burned. After 5 years, you still get burned sometimes. There's, it's trading. It's like, this is an old Georgia term, but this is something that my dad used to tell me, that we would go out fishing and he would say, when we're packing up the fishing poles and stuff, and I'd be like, man, today sucked. Like we didn't catch anything. And he would tell us, well, that's why it's called fishing. It's not called catching. It's the same thing. It's not. This isn't profiting. This is trading. Yeah. You know, I mean, you have to manage your risks. But I know it sounds redundant, and it sounds like, we're just repeating everybody that was before us. But it is unfortunate to realize that is the biggest truth in everything. It's risk management. Yeah.
Yeah. I sometimes think about that too. Like in nearly every video I make, I'm like, risk management, back test. Do your journals and stuff. It's like I say the same thing over and over again, but it's like it really is a simple thing. It's a simple concept to grasp, but it's hard to master. For sure. And I really think that's what separates the novices from the pros. The pros just mastered that simple process.
Yep. So for instance, like it must have been 3 weeks to a month now where I had the worst trading week of my career. Like I didn't trade. It was either a Monday and a Tuesday or a Tuesday and a Wednesday. I had the worst back-to-back days I've ever had in 5 years. So
how bad?
Well, for me, that's not terrible. It was like, just under 3,000.
Okay.
Which is not terrible, but on the stock this is the stock market. This isn't the crypto market. Crypto is, I don't even consider those, because those can be substantial losses, but they typically are outweighed by substantial gains in my experience. But on the actual stock market, I took the largest loss in 2 trades. It was basically $3,000 gone, boom, right away. And this was actually on the options market. And I knew what I was doing was incorrect. I knew that I was just loading up on something, on an idea. Like it was still, I took a short position and it was going long. And I was basically just trying to catch the falling knife. It was kept going up. I'm like, surely this is the point where it's going to turn around. And I was trying to predict the bottom, or predict the top rather, in this case. And I was overestimating my abilities to predict a top or a bottom, which, in trading, I don't think you should ever try to predict where the top and bottom is. I think you should just operate inside of the movement that's currently happening. But I took about a $3,000 loss in 2 trades, and I didn't trade for the rest of the week. I was just like, you know what? I'm going to go home. I'm going to hang out with my family. I'm just going to chill. I don't like a lot of loss personally. 3,000 was a lot for my small account that I run. I've been doing it for 3 years, but I'm not a millionaire by any means. Nothing like that. I'm a normal guy that pays his bills with this. And when I lose $3,000, that's like, shit, that hurts. I took a step back. I assessed where I was. I went back over my trades that I took, and I kind of reevaluated what I did wrong. And the following week, I took the two biggest, most profitable day trades of my career following the biggest losses that I took.
There you go.
Yeah.
How big
the very, the first one, it was like a Wednesday. It was a 550% profit on my investment.
It's pretty big.
And then, yeah. I mean, this is the options market. So, I mean, this can happen. And then the following day, it was a 730% profit on my investment.
Wow.
So I, made everything back.
Combined, that's like that's more than 1,200. That's like 1,500 because they compound.
Yeah, it was beautiful, man. It was easily double what I lost the previous week.
There you go.
Yeah. But if you don't have that mentality where you take a step back and assess what you did wrong and make changes to it, you're going to continue to lose. If you just keep throwing your money in, doing the same thing over and over again, you're going to continue to lose, because it was 100% my mistake. I should have went with the trend. I should have been on the right side of volatility. And I should have pulled back my position size rather than just dumping my money into it and hoping for a reversal. It's tragic, but that's how people blow their entire accounts and they stop trading.
Yeah, so a couple things there. One was you lost 3,000 in the 2 days, and then the week after you made back double. And that's important, because it's not just like you lose 3,000 and you make 6. It's about the law of averages, right? So
for sure.
Like if you calculate, I can lose 3,000 in the worst case scenario, and then in the best case scenario, I make 6, and in the average case scenario, I'm making like $1,000 a week or whatnot. Then you can say like, all right, I can handle this $3,000 loss, and as long as I can handle that, and then the law of averages carries out in my favor over time, then I'm going to be consistently profitable when we look at an average income kind of thing.
Yes, for sure.
And that's what this whole game is about. Like it's not about how much money you can make in 1 week or 1 month or even like 1 day. Like the people that play the long game are the ones that are successful.
Yeah, it's all about strategies, man. It's all about mitigating your risk and creating a sustainable strategy.
Yeah, I said a couple things, but I've forgotten the other one. I got a few questions here that I'm referring back to if we ever get off topic or whatnot. So, one thing. This was a question I had like right at the start that came into my head. So you've been trading for 5 years and you've been full time for 3.
Yep.
What was it that either happened, or what were your thoughts when you were like 3 years ago when you're like, okay, it's time to take this full time? How did you decide now it's time I should go full time?
Honestly, what made me go full time with trading was I basically found a really good mentor. I had been trading on my own, and I had found a really good mentor, and he helped me with my trading in general. And that's what really gave me the confidence to take it full time. Also, it was just a series of unfortunate events with coronavirus where, I have small children. I was out in the public, and I know there's a lot of political stuff around coronavirus, and, I definitely do not want to get into that. But I was in retail. I worked a normal job. I was a manager at a hardware store here in Florida, and I was around about 1,200 people a day. I was making decent money trading. I was making more money trading than I was being a full-time employee, being upper level management. And I was, working 60 hours a week. And just by me being there at the job, it was limiting what I could really bring in trading. So it became a point where I had saved up a decent amount of money where I could, I had a little bit of a cushion, and I just went for it. I had people tell me that I was making a horrible decision because they had strived to be in the position in the workplace that I was in for years. And I was only in that position for 2 years and kind of went past what most people were doing. And that's not to say I did it any better. I had a little bit better strategy than they did, to be honest. I went about it a little differently, but I met my mentor, and he just started a fire in me when it came to trading. He necessarily didn't do anything other than inspire me to dig deeper into trading and to figure it out for myself. But he did offer years of experience that I got basically downloaded into me versus having to go through it on my own. So once he came along, I just dove right into it.
I can definitely relate with like the mentor thing, but or rather I can't relate because I did do the thing on my own. And that was like that was a process of many years of learning before I became consistently profitable. And in hindsight, I could have shaved a lot of years off that time if I had to be like, hey, this is the way, this is a way to do it. Because obviously there's no one solution to the problem. But
yeah, I mean, and like he said, that was the guy that said, never trade options. Don't ever trade options. And, for the last 6 months, I've been trading options. So, he failed to realize that there is multiple ways to do that. And he was a crude oil trader, so he was a futures trader. It worked for me, but it didn't feel like home to me. You know what I mean? Like when I pull up the security that I trade and I'm looking at the chart, I almost feel like inside of the chart is my office. You know what I mean? Like when I pull up that chart, I feel like I'm inside of the workplace. I'm understanding what this language is, but each market moves so differently. I don't know if you've experienced this or not, but the futures market to the Forex market to the crypto market, it all moves in such a different manner, in my opinion, at least, where I encourage people to shop around and to see what market works best for them. Because for me, trading the QQQ is I've been more profitable trading primarily tech stocks than anything else. And I'm not a tech savvy guy. I don't keep up with any of that, but it just really works for me somehow. And I should probably dive in and figure out why that works for me, but it just does.
If you dive in, you might be able to say, if this is the reason that it works, let's go harder in on this reason.
For sure. Yeah. Wow. I've never even thought about that. Like why does the QQQ feel so at home to me? I should definitely figure that out.
Yeah. That thing about like trying different markets, because I have noticed that when I started with trading Forex, and I was in a demo account. Sure, my demo account was profitable, but I was doing that thing that you said before, trying to catch the falling knife. The demo account has like $100,000 in it or whatnot.
Yeah.
So the knife kept falling. I'm like, all right, buy. Let's keep buying, keep buying. And then it goes up. I make a ton of money. I'm like, yes, trading's easy. And then when I went into the real trading, nope, different story. Did not catch the fall. It landed on my toe.
Oh, yeah. Dude, the catch the falling knife thing, I'm telling you, like, if anybody is hearing this, let the dust settle. No matter what's going on, let the dust settle. Let the security figure out its normal price, then make your trade. Don't worry about missing out on extreme gains or this thing falling down to extreme lows. Like, if you get caught up in that, it's always your fault, in my opinion. Always, when I see huge gains on the market, I want to wait for that true value to come back before I really make my assessment and make my trade.
You remember recently when they had the rate announcement and price shot up overnight.
Yeah.
And then we were like, yeah, we made a ton of money, right? When that happens, I'm like, these gains aren't mine. These are going to be repaid basically straight away.
Yes. And I will admit that in that hike, it was a couple weeks ago, was where I lost my money.
There you go.
Yeah, because I was betting that when the Federal Reserve made their announcement, I was betting that the market was going to react negatively, and I shouldn't have done that.
Did that too.
Yeah, and I had heavy puts out on the market, and it ate me alive. And I should have waited to see the direction of the market and then go in, but I didn't. I got arrogant. I thought I knew what I was doing too much, and it bit me.
Yeah. And while we're on that falling knife analogy, like if we're going to stick with that, when we talk about risk management, yeah, it's cool if you catch the knife that's falling. Like imagine in real life, you catch a falling knife. That's sick. But how about this? It ends up in your hand, right? If you just let the knife hit the ground and pick it up, the knife is still in your hand.
Exactly.
But now you didn't worry about the risk of trying to catch a falling knife,
Right.
It was safe, and you still ended up in the same place,
Yep. And I would argue that you ended up in a much better point of control than you would have ever been able to achieve in catching that knife while it's falling.
Yeah. Yeah. This is like off topic, but I have this like thing, I guess, that I do. And there's like, if I drop something, I always catch it. Not always. Like my success rate is like 75%. If I drop it, I'm catching it. In the shower, if I drop the soap, boom, I catch the soap. I don't know where I was going with that, but there you go.
Yeah. Well, you weren't going to prison. That's for sure. I don't know if that's a saying in Australia, but
that's a saying everywhere.
Yeah, that's awesome, man. That's awesome. But yeah, so don't try to be Hercules out here. Let the thing fall down and let the dust settle, and then once it gets to some kind of normality, then make your assessment and jump back in. But it's less impressive to catch a falling knife than to be consistent with trading. That's the most impressive thing as a trader, is to be consistent.